Ladies and gentlemen, good afternoon. Thank you so much for coming to join us for this session. Now, investment opportunities, renewables in India, I would say is an extremely important topic, and I'm not sure where all our other colleagues are here, because an awful lot more people should be here for this session, really. I'm a bit surprised, but I'm absolutely thrilled that all of you have taken the time to join us. Why don't you come down and sit in the front, gentlemen, and join us here? Because what I'd really like, in one way, having a smaller audience is actually really good for us, because I have front row seats here going at a discount. No extra charge for first class today. So no, please do come down the front. Yeah, no, and also I'd really like your input here, because I think with the panel that we have, you know, you have a nice opportunity. We actually have a better opportunity to have a bit more of a discussion rather than if the room was packed, whereby it's a bit scary to go to a packed room looking for questions because we can never get out. So in this sense, you know, it's a nice number in many ways because you can give us your input into it as well. Let me get my panel up here and we'll really have a look at it. And again, I mean, as I say, looking at the importance of India right now, I mean, this is going to be one of the top 5 markets in the world, really in the next 5 years. And it's a place that, I mean, I think investors really need to be looking at. And some of the work that's going on there already is just quite phenomenal. So we'll have a listen to that. So I'm going to invite my panel up here, if they can come and join me. Ashish Setia, he is the APEC lead for power and gas markets from Bloomberg New Energy Markets. So if Ashish can join me here. And as I have 4 of you kind of come in, 1, 2, 3, 4, 5. Yeah, so I think you're good there. Vikras Daura joins me now. He is the Managing Director, Investment Banking with Yes Bank. So it's always good to have the finance people here and to have a few bankers in place. You can come next. I think we're good. The Chairman of the National Solar Energy Federation of India, Pranav Mehta, is here to join us as well. So I'm thrilled that he's with us. And also we have from Sky Power, the Senior Strategist for Finance and Development, Amit Day. So we have a nice cross-section here in terms of what's going on in the region. Thank you so much. And we have our fancy high-tech gadgets, but I know you all have good, strong voices as well, so please feel free to either send a question on this or by all means at any time, because I really think, as I say, we have a nice intimate group here and we can actually get a good discussion going here. Now, Pranav, I'm going to start with you because you're pushing the big agenda there with the National Solar Energy Federation and really bring us up to date in terms of where we are in solar power. I mean, the growth there in India is absolutely phenomenal. It's so quick.
Okay.
And because of huge growth and fast growth, an awful lot needs to happen very, very fast too. Okay. So very ambitious plans at the moment.
Yes.
Bring us up to date and let's see if these ambitious plans can actually come to fruition.
Yes. Can we have that one slide that I've given?
Now we hope this is a very good news slide. It's going in the right direction.
This slide kind of sums up what has been done so far in India, the exponential growth. And we are all a part of this growth. I am very happy.
Since 2008-9, just in case you can't
yes.
see any, so.
Yes, and I have been associated from 2006 onwards. Wow. 2008 was the first step that was taken. So that is the kind of background. But most important thing that I would like to say, that we couldn't have asked for more. My first interaction with the new government, when it took place, I said solar growth will take place on 4 pillars. Number 1 is volume. If volume is there, business will come. Steady volume, not just the volume. And not because we want it, because the country needs that volume of solar. Then the second thing we said is spread. Second important thing is spread. Like in mobile, when the spread took place, the costs came down. And again, spreading solar energy throughout the country is the need. Third will be technology. It has to be technology driven. Technology can make all the difference. We'll dwell on it more if required. Even in case of mobile, we have seen the technology change, that how the costs have come down and also technology has helped us. And fourth, and the most important, some of my colleagues here, is infrastructure to evacuate And finance, most important is finance. You must have heard the latest figures that have come, and to my mind, it is all revolving around financial engineering, and I would even call it corporate engineering, because people have to give business to their shareholders. In short, India has grown in the last few years from 0 to 5,000 megawatts. This has gone up, to 5,000
Really, in 5
megawatts.
years, yeah,
Yes.
it's it speaks for itself there. That is
impressive,
quite
and we are
incredible.
all excited about it. We are very much part of it, and we are going to have 20 times as much as what is shown here, as 100,000 megawatts in solar. And we are talking of renewable energy, so let us talk not only of solar. We'll have 175,000 megawatts as the target, 100,000 solar, 60,000 wind, and 15,000 biomass and others. So that is the solar growth, and we are really excited about this.
Okay, hold that excitement for a moment, because I think this is fabulous, and we look at growth like this, and we'll come back to you. We have a lot more to discuss. Amit, Sky Power, you're the guy with the technology. You're doing some big projects in India at the moment. Bring us up to date, as a major player in this sector, globally, and indeed what's going on in India, and how you've managed to take advantage, of this skyrocketing demand for Sky Power, hopefully. There we go.
Sure. For those who don't know, I'm with Sky Power. We're one of the largest developers in the world.
Easy now on the ad for the company. Talk to me. Come on, Amit.
Yeah, we're across the world, and India is really one of our primary markets. I mean, the growth in India, we've been in India for a couple of years, just kind of seeing it grow. And, about a year and a half ago, we set up operations and decided this was going to be one of the really fantastic markets that there is going to be in this world over the next 5-10 years. So India for us is a core focus. We are committed to India. We have committed to the Indian government that we will be building 18 gigawatts over the next till 2022. And it's a commitment that we certainly hope to keep. We are, as I said, very active. We have so far to date last year won about 437 megawatts of tenders. That's in 2 states, Madhya Pradesh and Telangana. We are right now in the process of finalizing things to start construction on those projects, or at least on the first one. The second one is a little bit further away. We are very active in the bids that are coming up. We do see India as a very competitive market, but competition has never been something that Sky Power shies away from. So for us, it's a fantastic opportunity. There are certain challenges in India in terms of the grid. Some of the states are not as easy to transact business in as others, and we are very wary of that.
And how's that regulatory environment? I mean, is that something that you're obviously managing well in some of the states, but is
Correct.
that something you need to see more streamlined across the country?
It would be nice if it was more streamlined. India is always a little bit more difficult than you expect it to be, but I've been doing business in some form or the other in India over 20 years, and I will say it's a lot better today than it used to be.
And again, when you look at the potential, I'm sure, a company like Sky Power, I mean, you're there, you've got that commitment in place, but the potential is huge. I mean, this is a huge country.
Potential is huge. The number of gigawatts we're talking about, are mind-boggling, and 175 gigawatts by 2022 is a huge number. I mean, it will change the face of India in terms of power generation, but I think a lot of things in India hopefully will change over the next 7 years for the better.
Ashish, when you look and analyze these figures and look at that projection, you can see the demand growth, you can see the political will that's there, you can see the intention. Is it perhaps a bit too ambitious? But if they've achieved this so far, I mean, in terms of those figures, I probably have to take that back and say, but anyway, for skeptics out there who might think it's a bit ambitious, what would you say?
So I guess analysts and lawyers, right, always are a bit of a skeptic. So when we do our baseline number calculations, right, we look at all kinds of things which can hamper growth of a market. Amit mentioned a few, there are a few more. But the first thing you have to realize is, India is talking about 175,000 megawatt of renewable energy by 2022. We roughly have 35. We have to add 140,000 megawatts in the next 7 years, roughly. That's 20,000 megawatts a year. If you split it across evenly, do a simple average, right? At $1 million a megawatt, roughly, again, you need $20 billion of capital every year flowing in the market. So we do a bottom-up project analysis, look at where money is coming from, who's investing. We're roughly at $11 billion last year, 2015. The best year in India ever has been 13. So we really need to double capital availability in the sector. The other thing, important thing is, which we don't really realize, or when people talk about the 100 gigawatt, the government itself breaks 100 gigawatt in two different numbers. One is 60,000 megawatt or 60 gigawatts, grid-connected capacity. The other is 40,000 megawatt. Now, we are quite optimistic as an analyst house on the 60,000 megawatt target, right? We think quite a bit of that is achievable for various reasons. But the 40,000 megawatt really needs a huge push going forward, right? Out of that 40,000, I don't know what the real number is, but I think it probably is 1,000 megawatt right now. So we really have to, the grid-connected capacity, which Mr. Mehta was showing, has really taken off, but the utility scale projects, 1 megawatt, the big projects, 1 megawatt plus projects, but the distributed solar, which has been the kind of turning ground in countries like Germany, Spain, Italy, right, has not really taken off yet. So we really need to look at that as well.
So again, I mean, it all comes down to more opportunities, because it is something when you look at the development in other countries that's bound to go there. Vikras, I purposely left you to absorb and listen to this and to comment at this point now because, you're the man with the money, so to speak, and all of the panels that I have, moderated over the last 2 days, everybody's talking about the need for finance, the availability of finance, sometimes the gap in terms of finance, and you've worked across, other areas, natural resources, metals, all of that. So what have you found in the last few years in terms of the financing available, for the renewable sector? And of course, as one of the leading banks in this space, is there good money available? And are you happy with the projects that are available to match that?
Right. Yeah. So I think just taking off from what Ashish said, in terms of the project, projections on the kind of gigawatts we are going to get on the ground, I just want to mention, we added 2 gigawatts in solar last year, the entire calendar year. And in March, in January, February, March of this calendar year, we'll probably add another 2 gigawatt. So in terms of acceleration, it's happening. So whatever we did in the entire 12 months last year, we're going to do that in 3 months. Now, coming back to your question, there is no lack of capital or financing. The problem is how to structure that financing into the company.
Yes, yeah.
There's enough money out there which wants to come into India, be that US-based money, Europe-based money, Middle East-based money, or even China or Japan for that matter. The problem is there are 2 key risks for every foreign investor in India, one of which is the foreign exchange fluctuation. The thin margins that solar works on today, the returns that we get, the margins are fairly dependent on the kind of financing cost you have. And on top of that, if you start facing fluctuations in the exchange rate, and in Indian rupee has depreciated about 3% per year for the last 25 years against the US dollar. But it could fluctuate up to 7 to 8% within a single year. So how do you hedge that? And hedging comes at a cost in India because the market is pretty shallow, it's not very deep. So this is one problem which exists for any foreign investor coming into India. The government has tried to address that by doing dollar-based PPAs, but those are very limited in number. Maybe just a couple of gigawatts will be given out as dollar PPA. Coming to the second risk for financing is actually the counterparty risk, because the distribution company, the DISCOMs of each of the states, is the ultimate buyer of power, and they will pay you the money when you supply the power to them. And almost all of them are making losses, sitting on huge debt. And the money which comes to you will come. There's no default, no question that there will be a default, but there could be a delay of 2 months to 3 months, maybe 6 months. and you start factoring that in, you lose your IRR. So this is the problem. The government is addressing the discom risk in a fairly comprehensive manner. We are confident in the next 3 years, you'll probably be left with just the forex risk, not the discom risk. But to answer your question, there are a lot of projects. There's a lot of money. We've tried to do our bit. Maybe we can talk a bit later in the discussion on the green bonds that we are doing.
Yes, absolutely.
But the kind of response we got to the green bond
that,
has been fantastic, and we've been able to deploy our first green bond in 24 hours.
Yeah, no, we'll come back to that. Amit, I want to bring you, you're also the lead of finance for the India projects as well. So how are you working with the banks, and again, being an international player, as well as now regional? Are you working directly with Indian banks or international banks, or who are you partnering with in terms of making sure that the money's in place?
We're working with our friends at
With
Yes
Bank,
here.
there you go. Okay, so that's good. Always good to have your client nearby, and always good to have your banker beside you.
I would say Yes Bank is one of our key partners in
Yes.
India, and we've had a very close relationship with them for a very long time. India is, there is a domestic market. It's a reasonably deep market. I mean, there are quite a number of banks there. Obviously, there are PSU banks as well as private banks. Yes Bank being one of the private banks. So there is a domestic market for financing, which is fairly attractive in India. There are also foreign sources of capital, as has been mentioned here, that could be attractive alternatives as well. And we are looking into those as well at the same time. I mean, our job is to really look at the best possible sources of capital that can be achievable. So, India is one of the, I'd say in the emerging markets, that we look at, it's one of the more interesting ones because it has strong domestic capability, and that is very attractive to us, and, liquidity and to some degree in the market.
Ashish, talk to me about the international players that are there in terms of opportunities, for foreign investment. I mean, we've got a lot of the big players there, in terms of Sky Power in place. We've also got EDF, NL, Semcorp, and again, on the banks, big players. So how do we actually bring the foreign investors in? And also, how do you say to them, your money is safe, Ultimately, they want return on this, and there's still probably a perceived risk factor.
So let me answer your second question first. I think I agree with Vikas a lot. I mean, all of us have been in the sector for a long, long time. I think apart from the Dabhol Power project, which is probably a black dot on India's power sector, which we managed to turn around quite a bit in the last few years, you usually do not see, as Vikas was saying, defaults, right? So the one way of operating the market is you have to, to a certain extent, manage your expectation on whether you'll get your money on time or not. And let me also say, we've been running a survey across the market recently, and we have realized, when we talk to a lot of project developers and the DISCOMs themselves, that the delays have started coming down quite a bit. I mean, 2 years back, 3 years back, if you would ask me the same question,
Yes.
we were looking at 12 months, 16 months, 18 months of delay, payment delays. We're now talking roughly around 3 to 6 months time frame. So that has improved. In terms of foreign investors, there are actually a few different classes of investors. One is the utilities, right? Companies like NG, ex-GDFCUs, EDF, NL, Semcorp of Singapore, big utility there, CLP, all of these players are in the Indian market.
So the confidence is there.
Yeah, because fundamentally, if you look at it, we do power market analysis across the world. India is the only major economy in the world which has a potential power market growth of 4 to 5% every year. If you look at China, the power demand in China last year grew at 0.5%. Power demand in Japan, which is a market which is a similar size to Indian market, probably less than 0.5%. US 2%, maybe less. So India is really the only major economy in the world where the power demand growth projections are humongous by any analyst firm. So that gives a lot of hope to the kind of utility kind of players, project developers, IPPs. And then there is a class of financial investors, right? Infrastructure fund. We really haven't seen pension funds, and maybe Vikas's thoughts on that in the Indian market because of the way finance is structured. But you have different class of investors in the market, and they're growing, right? So obviously, the confidence is there. There are bottlenecks, but I think the confidence is increasing.
Now, Pranav, we were talking earlier too, and you were saying there's more than $100 billion that's going to be needed in finance when we look at these projects.
Yes.
And in the aftermath of COP21, the commitment is there now. I mean, I think there's no stopping this, that momentum is in place. So India, like everybody else,
Yes.
is a major player. And,
Yes.
you've actually even been working very closely on this as well. Are you confident that that money is going to come and that, or, what will be the big challenge?
Okay. I'm very much confident. The reason is, Indian banks themselves, last year when we had that Reinvest Summit in February, together they have committed for 75 gigawatts.
Yes.
They have said that, yes, we have the money. But obviously, out of this 100 billion, everything India does not have. 30 billion will be the equity, 70 billion will be the debt. So this has to come from outside, and it is already showing up. The latest bid that we are all talking about yesterday, which is, there is a big drop. Now we are talking of 6.5 cents. So, but out of the 3 bidders, 2 are from outside India. And they are serious players. They are not just any Tom, Dick, and Harry. So that makes me more confident than ever before. And I would also like to add another dimension to this, that in my earlier avatar of gas and other projects, where everybody is a doubting Thomas to begin with, at that time, I am a non-finance guy. I would always say that if there is a demand for the product, economics will adjust itself. And it has come true in my life. Here is a demand. It has to come true. The world wants it, not only India.
Yes.
Therefore, the world has to see that it happens. We have Global Climate Fund. We have Indian banks. We have Indian entrepreneurs. We have a young, force to realize their dreams. So all factors are positive in this favor.
Good. I mean, and that's
We have to
long,
make it. And
long
of
may
course,
it
you
last.
just cannot it is an ambitious project. You have to work hard for this.
Yeah.
And let us join hands and do this. It is possible.
We'll just stay on the finance for a side, and I am getting a few questions here. I'll certainly move on to in a minute. Because let's come back and talk a little about the green bonds, because again, that was something that came up in many of the discussions, even here in the UAE and other areas, which they don't have yet. But talk to me about the success of the green bonds.
So, jargon aside, a green bond is still just a bond. It's just a corporate bond. But the reason we call it a green bond is because we are going to utilize the proceeds only in green energy. Yes. In February 2015, we did our first green bond, which was, it was not only our first green bond, it was India's first green bond. It was a tiny green bond at about $160 million. So that's enough to finance about 250 megawatt of solar power.
And so a real shift when something like that happens for the first time. I mean, it's the start of so much more.
Yes, I think we always knew that since we are, a known name in the Indian market, we would be able to get the money. What surprised us was that it got oversubscribed in a couple of hours. And these were the same players in the market, the pension funds and the insurance companies, which have never directly invested in green energy. So we suddenly discovered that there is a demand for investing in green energy, but people don't have the right instrument, or they don't know how to go about doing it in a safe manner, and by trusting an expert who will do it on their behalf. So very soon, IFC did a bond, what is called a masala bond on the London Stock Exchange, and the entire proceeds went into our second green bond. Right. And that's given us confidence, as I don't know how many have seen the announcement yesterday, but we are doing a $500 million green bond on the London Stock Exchange now. And going back to our first green bond, $160 million was deployed in 24 hours. So the demand for the green bond was there, the demand for the money was there. What was not there was the right instrument for people to put the money.
Amit, you want to come in on this? And Ashish, I definitely want to keep you in this one there. Please.
No, green bonds, I think we are really, we believe is a very exciting development. We have seen this market grow not just in India, but all over the world.
And the appetite is there. I mean,
the appetite is there, and it's increasingly going to become, a form of financing that more and more, we believe, will be one of the focal points of financing for infrastructure projects. So it's not, today it's relatively small. We're seeing a lot of, big companies, banks, and so on and so forth issue green bonds. But we believe that in a number of years, it will proliferate to a much more standard form of financing for solar, wind, renewable energy in general.
Absolutely. Ashish, also talk to me about, the prospects for yieldcos. We talked about this at our finance session yesterday too. I mean, we look at the demise of yieldcos in a way, given the state of the oil market and all of that, and particularly in the US. But I'm beginning to feel there's a resurgence on yieldcos, particularly now when we look at the solar side.
That's a very good question. But let me go back a little bit to what Vikas said and start with the fundamentals first. So one of the things is, as Vikas pointed out, we are now in a situation, especially in the solar market in India, where we're operating at very thin margins.
Yes, yes.
And in one of the ways, and I don't know if people realize this, there are two reasons why the cost of solar has come down in India. Not because the module prices have come down globally, because the module prices have come down globally in dollar terms, but the Indian rupee has depreciated to counter that balance. So in Indian rupee terms, you really haven't seen a huge impact. The prices have come down, one, because of huge competition in the EPC market, and that has helped a lot. The other is that the cost of debt in the country has come down significantly in the last 2 years, 2.5 years. Almost by, I don't know, because it's a good number, 200 basis points, or 150, 200 basis points. So the cost of debt has come down. The cost of equity also has to come down. And when a market starts and then starts maturing, the equity return expectation, you first have, kind of really early stage private equity investors coming in. They need a post-tax equity IRR in an Indian kind of market of 16, 18, 20%. And then the market keeps on maturing, and then you really have infrastructure fund, yieldcos, all kinds of mature investors who want to be in infrastructure sector for a long time and probably need, I don't know what a good return level is, 12%, 8 to 12%, something like that. So we are now starting to see these kind of starting points on that market. Securitization of renewable energy projects has always been something that we as an analyst firm have followed a lot globally, because there's been always this issue that large pension funds, for example, do not really want, as Vikas was saying, to go and invest in specific projects or even platforms to a certain extent. So there's a mandate for them that they have to kind of, invest in traded equities or something like that. So how they do that? So you have to have yieldcos. Interestingly, in India, you now have the government is trying to create something called the Infrastructure Investment Trust, which are a form of a yieldco platform, which will be, so government has come out, I think, with the regulations already. There's some discussions that the industry is having on taxation issues and related issues on the Infrastructure Investment Trust. But hopefully next 2 to 3 years, you will have a system in the Indian market where a yieldco kind of structure can exist. The only problem is, in the past, the word yieldco has created a lot of issues in the market. And the simple reason has been I think 2 issues. One is that the developers, if you go in a market and say you're going to offer a high growth, high dividend per share growth, or a continuous basis for next 5 or 6 years, it's very difficult, because the projects you are picking up in different parts of the world as a yieldco platform are projects that are offering you lower and lower returns every time you go and bid in an auction. So that does not fundamentally match well with a promise in the capital markets that you are going to give a very high dividend per share growth. And that has been fundamentally a problem. But yieldcos, you are absolutely right, they're starting to come back in a different shape and form. There's been a lot of discussion on private placements, private yieldcos. And the good thing is there is kind of rebalancing of the market, because now people don't expect that a yieldco in the US market will get, trade on a market to book premium of 4 or 5 times. So the expectations are coming down, which I think is good for the industry.
I mean, do you want to get in on this, please?
Sure. I come from Canada, and in the Canadian market, yieldcos have been around for a long time. They've been around in one form or the other for about 20 years in the energy space, not necessarily renewable energy. So we've seen the cycles of yieldcos, and they go up, they come down, and for sure the yieldco market will come back. It is an attractive option under the right circumstances in terms of being able to crystallize some of the assets that developers or energy companies or IPPs hold. So they will come back. There are certain risks, and we've seen that in what happened recently in the yieldco market, in terms of some of our competitors putting yieldcos out there which were probably not priced well. And also, in terms of what Ashish was mentioning, in terms of, forward expectations, in terms of where they were buying the assets and what the return expectations, and they all contributed to, along with other factors, to a collapse in the yieldco market. But it's temporary. I think within a year or two, you will see yieldcos up and above.
I want to, Vickers, I've got a few questions coming in here, so let's get through a few of them. And one for you, because if I may, looking at the full cycle of the solar projects, where are the greatest gaps in raising the capital and the structuring finance? Are they on the generation or the T&D side? So where are those gaps?
The question is that in the entire value chain from generation to transmission, where's the gap in raising finance?
Where are they? Are they on the generation side? It's, I don't know, maybe the person asking might want to give us more, but looking at the full cycle of solar projects, where are the gaps in raising the finance, structuring finance?
So the gap in financing will not be very different because the ultimate buyer and the counterparty is the same. Whether it's a transmission line or whether it's a generation of solar power. But if I can just talk a little bit about the gap in financing today, the thing we need to really understand is that financing is available. So when we say gap in financing, that's incorrect. The financing is available. The problem is that there is a mismatch between the kind of financing available, and I'm talking domestically, and what is required. Yes. So you will have banks which will give you loans. Earlier, the loan period was for 7 or 8 years. That has come up to 15 years. But the problem is that interest costs are floating. So what happens is that as interest costs go up and down, your cost of capital is also going to change. And for that, for a solar project which has a life of 25 years, it's problematic. And that needs to be resolved by doing bonds which are of a longer tenor, could be 10 years, 15 years, and at a fixed cost of capital. Now, just to not take too much time, but to explain why bonds are not happening in India today is because all bonds need a certain credit rating. In India, at least AA. And in India, individual projects don't get AA right now because the ultimate buyer is the distribution company, yes, which itself has a low rating. So if your ultimate buyer has a low rating, how can your project have a high rating? So till the time the distribution company issues are resolved in the next couple of years, companies can't do a bond. And therefore, they will have to take relatively expensive bank financing, which is not only expensive, but unpredictable in terms of how much it's going to cost you. So capital is available. The right kind of capital is not available.
Pranav, another question that I have here. What are the opportunities in transmission and distribution, particularly smart grid technologies? So how is that developing at the moment?
Yes. In fact, the government has considered this as a very important area. And they have announced 48,000 crores of rupees, whatever it translates into, towards developing the transmission line and strengthening the existing transmission line, on the one hand. On the other hand, the smart grid technology, storage, that also is being given a lot of importance and focus. And we do expect that the storage technology that is coming up. So, in fact, one of the important points that I would like to touch is on technology. Number of technologies are coming up, yes, not only in PV, concentrated solar power also, which so far has not come up well in India and facing problems throughout the world, but there are breakthrough technologies coming up, which I had emphasized at Washington during the US-India Energy Summit. 400 kilowatts, CSP 24/7 with storage, developed by MIT, is there, ready to be tapped. And for the first proof of concept plant, Government of India, I have been able to convince them to fund 50% of that. And 50% will come from the consumer, who will consume the power, who will consume the waste heat of that. So if this succeeds, and it is DOE who has spent money on developing this technology, throughout the world it is a big potential, and likewise in India. So in India we will have, because CSP will give you 5 times what PV is giving. So sometimes I always say that PV, we are not talking of CSP. Why? We should talk of CSP, and technology will come to the rescue, 100%. In case of smart grid, in case of storage.
Talk to me about technology, when, particularly in what Sky Power is doing and where you see the shift in technology, and what will move it to the next step in the Indian market. I mean, any market, but particularly, or where have we learned better lessons?
So I mean, I tend to agree with Pranav on a number of things. I mean, technology is moving very, very fast. We are seeing, the panels and the efficiencies of these panels, literally increase by, 10% a year, or in that kind of a level. The technology, the amount of money being invested in all these technologies is actually very, very substantial. Now, however, having said that, this rate of improvement in terms of PV panels cannot continue indefinitely. There is a theoretical maximum. And as we get closer to the theoretical maximum, there will be a slowdown in terms of how fast the productivity or production increases can be achieved in these panels. We certainly, being a purveyor of PV panels, we certainly believe in PV. We have also looked at CSP technologies in different forms. We think there may be an opportunity there as well, coming up over the years. But, CSP panels that we've looked at and technologies really, to date, we believe that at least PV is a better option. But we are not tied to any technology. We are actually technology agnostic. The area that I most agree with Pranav is in battery storage, or in storage in general. We think that this will become, one of the key drivers for renewable energy generation, particularly solar energy generation down the road. The economics don't work yet. We've looked at a lot of different technologies in that space. We have, researched them. We have a team devoted to battery storage who are, looking at different technologies, assessing their impact, and so on and so forth. And we're just waiting for the economics to take shape, whereby, we'll be able to deploy this on an ongoing basis, and it will be a very, very efficient overall comprehensive solution. That's our perspective.
Talk to me a little, maybe Pranav, and I don't know if maybe I'll bring Vikas in on this as well. The growth of manufacturing in India and the potential. I've been very heartened to see some distributors here who are actually, and I was talking to them in terms of, are these panels made in India? And and that is, again, that's a new industry that's growing in India. The potential there, I would think, for employment, for the expertise, all of that. And again, what's the finance for that industry? And the quality. I mean, they have to be making good panels. If they're not, there's not going to be a market for them.
Yes.
How is that growing, that manufacturing size, Pranav?
See, out of my 65 solar companies as members of our federation, we have leading solar manufacturers as our member, Vari, Vikram, MV, etc. And we have been stressing, and all of them are growing. They are going to expand. Plus, more players are coming. So yesterday, there was an announcement for Andhra Pradesh, where 5 gigawatts worth of manufacturing is coming up.
Oh.
So that is by the SL group. So that also is going to be something very important. All the existing manufacturers are growing. And also, let me mention to you, not only the big ones, but small people who are putting up 50 megawatts. Some people are even 25 megawatts. Regionally, they can supply. And all of them have to conform to the global standards. That all along we have been enforcing, and it will be enforced through Ministry of New and Renewable Energy also has all the testing facilities available. And it will be kind of 100% testing at times, especially in rooftop.
Because where's the financing for that coming from? And also, as we say, for the small to medium business, and particularly maybe emphasis on small as well, and not just on rooftop panels and that, to looking at more innovative ways. Because you look at a country like India, and there's an awful lot of people there that have no access to any power. And they're not real concerned what's going to give them light or heat. They're going to get it whatever way they can. And they have a right to that. Obviously we want, the country has a responsibility to try and move them in a more sustainable direction. But what about funding on, a smaller level? Where's that coming from? Is it coming from the big banks? So on both things, the manufacturing side, and again, for smaller projects, perhaps in some of the villages and that.
So I think you're referring to the distributed part of it, the microgrids, because I don't know how many people outside India know this or how many people within India know this, but 1/3 of Indians, that's about 330 million people, don't have access to the grid.
1/3.
1/3. So
That's a lot bigger than I had thought.
so around 330 million people don't have access to the grid because the grid has not reached them. The promise of this government is that in the next 3 years, everybody will have 24/7 power. And to achieve that, the only solution is solar. And the government is certainly giving a lot of incentives to set up off-grid solar, distributed solar. Ashish mentioned it earlier, of the 40 gigawatt target right now, we have only 400 megawatt. So that's all we have in India in distributed solar right now. Having said that, there are a lot of success stories where multilateral agencies and some of the other less return-focused investors have put money behind microgrids. But there certainly needs to be a commercial model which needs to come about for distributed solar in India. I think this is a very big opportunity because there doesn't exist a viable distributed solar model in India as of today.
Now, a lot of what we're hearing too throughout the discussions is, the need to bring, political action, social action, to really get people on board in this. And when you look at some of the big polluters in India, we had this discussion too, and there's been a bit of, pullback, a bit of resentment. Some of the big players, the steel,
Cement.
all of the big cement people,
Yes.
yeah, and they're not real keen on putting too many solar panels anywhere right now, but they're
Yes.
being dragged, kicking and screaming,
Oh,
and
yes.
it's actually
Oh, yes.
beginning. As we say, it doesn't matter how we get them there, but once we get them. Tell me a little bit about how that's, because when that shifts, and
Yes.
particularly big business like that and the big polluters, so to speak,
Yes.
when they
Okay.
begin to contribute
Okay.
on the
Yes,
right
yes.
side, it
I would like
changes
to
things.
mention two very important matters, points in this connection. RPO enforcement is the biggest challenge that the country is facing. And as National Federation, I have gone to the regulators of each state. Steadily, we are covering the entire country to enforce the RPO regulation. And RPO regulation is for the obligated entities that you mentioned in the area of steel, cement, etc. And there was a famous case of 13 cement manufacturers going to all the litigation. And finally, the Supreme Court of India has ruled in favor that no, nothing doing, you have to put up. So that is going to create a big market. But despite the Supreme Court case judgment, still the enforcement, we will have to work on it, which through our federation we are doing. And ultimately, it will surely, because Supreme Court order is there to back us. So that is certainly obligated entities will have to buy. There is no question. So that is one thing. Second important thing is that the Indian government, just a week ago, has sanctioned rupees 5,000 crores for this rooftop solar. And there are success stories in the most places like Uttar Pradesh and Bihar, where through multilateral agencies and others, Rockefeller Foundation, things have come up, and also there are some small companies. But as he rightly pointed out, Vikas, business model is yet to come for these smaller projects. I would suggest in this case that we give a cluster of, let us say, 100 villages to a company that at a given tariff you give it, whether you give it with whatever source, but you have to give electricity. And through smart metering, etc., because people will pay. It is not that people will not pay, because they are already paying for kerosene. Right? So that business model has to come up. That is true.
And again, we do have to wrap this up, so I'm going to try and give everybody just a quick last few words on that, and maybe coming back to the financing side of that. All of the other countries putting in place, obviously, regulation for new build, retrofit, particularly in the cities in India, it must be a nightmare to actually come back and have to do that. Where does that money come from in terms of the big retrofits that have to be done? Can you address that one, Ashish, or is it more? And then another one, perhaps for Vikas, looking at return on investment for solar projects. But
you mean retrofits on the demand side of the power sector, is it? So I think Mr. Mehta mentioned...
And I need a few quick answers on this one. I'm getting the eye to say we have others to do.
Mr. Mehta mentioned this a little bit. So the government of India has been running a program for the last 15 years or so, if I remember correctly, to upgrade the grid and to help reduce power demand as much as they can, right? To make the system more efficient. There is a specific project they're doing on smart grids right now, which is very interesting. They're doing around 14 or 15 pilots across few cities in the country. And that's only going to scale up, because apart from all that we're doing in renewable energy, the government also has a smart cities plan, which they want 100 cities in India to be converted as smart cities. And essentially, both of those things tie up slightly well together.
Because when we look at return on investment, just in your final thoughts like around that and anything else you want to put
So
on.
return on investments
For
in
solar.
solar are still fairly attractive compared to the rest of the world. Yesterday, the rates so in India, there's no FIT for solar, it's reverse auctioned. So yesterday, there was an auction in Rajasthan where we saw the lowest rates ever at 4 rupees 34 paisa, and which everybody's talking about. And it was a Finnish company, Fortum, which invested. But even at those rates, they will still make an unlevered equity return of 13%, which is pretty decent.
13, 1 3,
At least
yeah.
13, yes, at least 13%, which is fairly decent compared to various other opportunities, other parts of the world. That's our view as a bank looking at the numbers.
Amit, your closing points, and again around that.
I mean, our view was it
investment.
was 14%, but
Hey, that's better still.
that's fine. But no, is that in India you still can get very reasonably attractive returns. 14% in the Indian market is reasonable, but I mean, obviously one would want higher. I think the market, over the last 6 months has just kind of, from being very stable and price-based, where prices were in a certain range, the competition level increased and the prices have actually gone down dramatically over the last 6 months. I think some of the pricing that's there in the market right now is probably on the low side, and what will happen is that there'll be a little bit of a reset, and prices might actually hover around there for a while it kind of adjusts. The market kind of catches up the pricing of the other things, so that the average return probably in India I would see being very reasonable at 15 to 16% rather than the 14% that I'm looking at right now.
So Pranav, you're going to get the final word. A man whose dream has come true, a lifelong work in this industry, really sort of pushing this at a time when people probably told you they thought you were crazy.
Yes.
And you see this happening now. I mean,
Yes.
Wonderful, for you and again for the country, but are you very optimistic about the future in this?
I would tend to agree with Amit that the lowest quotations that are going around today, it is a boiling pot that is going on, and the truth will come out over the next 4 to 6 months. So we need to watch on that low-cost part. But having said that, very important thing that I would like to stress is that you have to do this. I don't talk of percentage. Let these people talk about the percentage. If you don't do this, what do? You cross-subsidize the fossil fuels to 80,000 crores per year. You can't do that. So we have the National Clean Energy Fund, and we like similar green bonds to come up. We want a similar global climate fund to come up and finance and make it affordable. I mean, it has to happen because, as I said earlier, there is a demand and economics will adjust itself, and I'm sure the growth will take place as desired.
Super. On that, very sound, optimistic note. Thank you all, gentlemen, so much. Thank you to Ashish, Vikas, Amit, and Pranav. Thank you so much for all your input. I really enjoyed it. Thank you so much.
Thank you.